Yep. So we did up to cash receipt channel. Let's start with the cash payments channel. Right. As I was doing last week, we'll do everything together. Okay. Right. Now we'll start with the wages in the cash payments. Right. Wages is 10,200. What is it? Is it going to cash flow statement? Yeah. Is it going to cash flow statement or income statement or both?
Income statement is like expenses.
Income statement is expenses, is wages and expense. Yes. Is it going to the cash flow statement? It's an outflow. Very good. So then wages is going to which heading? Operating, investing, operating day-to-day activities. So then we'll write wages 10,200. So at the same time, we are recording in the income statement because it's an expense. Wages 10,200. Next one. Right. Materials, expense. You are paying for the material, 3,400. Right. Materials is not directly an expense. Materials is not directly an expense. Why? Material is something that you purchase. It's kind of an asset. Okay. Materials, like for example, it is like it is like inventory purchased by a supermarket. So then it doesn't become an expense straight away. So that's why remember we dealt with that earlier. See, we put that 3,400 here to calculate the materials used. Yes. Remember we used that to calculate the materials used that we have already considered. See, 4,300 we calculated, which became an expense. Yeah, cost of materials used. We have done with that.
Oh,
yeah. So then we don't have to worry about it. Right? Then accounts payable. Sorry, before that, materials. It's not an expense, but is it cash outflow? Yes, that we have to record in the cash flow statement. So we'll write materials purchased. 3,400. Okay, next one. Accounts payable. Is it an expense?
Accounts payable is like the people, like the organizations, that is exposed money to.
Yep.
So like they will have to pay all that money.
Yes. So that's not an expense necessarily, but is it going to the cash flow?
It's an
Outflow in the
it's
operating. $3,100. Then drawings. Is it an expense? Drawings is owner withdraws business money for personal use.
it's an outflow.
It's an outflow. Is it an expense?
No.
No. Drawings. Which category is it in the cash flow?
It's like taking money like directly from the business.
Oh.
Probably the financing.
Financing, wonderful. So it's a cash outflow that changes the financial structure. So we can say drawings, 2800. We'll put all of them within brackets the payments. The other one also I'll put within brackets the other outflows. So get used to use brackets. Right. Then next one. So we are done up to drawings. Next one, sundries, which is firstly van expenses. Right? How much? 800. That's an expense. Very good.
The outflow.
Outflow as well. Good.
And like since you're using the VAT regular itself, operating.
Operating. Good. So then you can say van expenses. 800. You don't put brackets in the income statement. So the only place we are using brackets is cash flow statement. And then van expenses. 800.
Loan repayment.
Loan repayment. Very good.
That's outflow in financing.
Loan repayment is an outflow in financing. Very good. Is it an expense?
Yes.
No. Loan repayment means you know what it is? You repay your loan principal. Loan principal is a liability, right? So it's not really an expense. In the outflow of financing, loan repayment, 400.
Yes.
GST, no, before GST, sorry, GST settlement, correct. GST settlement is,
I don't know what a GST settlement is.
yep. GST settlement is, what is it? See, I'll show you. Now see, we have a GST payable, which is a liability at the beginning of the period, right? So you have to pay 1,000. Why do you have GST payable here? Because, yeah, previous period we have collected more GST of 1,000 than what we received. So that means we have to pay that, right? We have to pay that today. I mean, when we start the next period, then that becomes a GST settlement. Opposite, what is it called? GST refund. We have done that. Okay. Remember we did the notes, GST, right? GST refund. GST refund means what? That means last period we had overpaid GST, right? Yes, ATO is giving us money, right? ATO is giving that money back, which is GST refund. Okay, right. So then we'll write GST settlement. Where do you record? What is it? Is it an expense or cash outflow?
It's an outflow.
It's an outflow definitely, but not an expense. Where do we report it? Operating, investing, financing. Operating. Why? It's yes, it's a regular transaction. 1,000. Right. Next one, sewing machines, 4,500.
Usually so.
Yes. So sewing machine operating outflow. You sure?
Wait, it's not current.
Non-current. So
Best.
investing. Is it an expense? No. Okay. So sewing machines, we are going to the investing. So
Wait, so can you explain like what an expense is again?
yes, I will explain. Yeah, firstly we'll write sewing machines. Sewing machine is 4,500. Put that within brackets. Right? Yeah. So then to explain an expense, what is it? Remember the definition? Either it is an increase in liability or decrease in asset, right? Now think about the sewing machine, right? Sewing machine is, what is it? So it's a machine, basically an asset. Okay. So you purchase machines. So then what happens to your machine? Yeah, increase, decrease, increase. Now, what did we say? Yeah, we see decrease in asset. But also you can argue when we purchase that in cash, our cash asset, cash at bank also decrease. Right? Because we pay money, yes? We pay money to purchase a machine. So our cash at bank decreases. Yes. And asset decreases. Then kind of going to our definition. Kind of going to fit our definition. But again, another asset is increasing. Overall assets, no effect. Neutral, nothing. So meaning, what can we say? Then it's not going to fit our definition. So no way.
It only has to decrease.
It should decrease. Right? It only has to decrease, but this one is increasing, the other one decreases. Overall assets, 0. Right? So meaning, this can't be an expense. It doesn't fit our definition. Yeah.
But what if you buy like one thing and it costs a lot of money? Like let's say you buy one sewing machine and it costs $10,000.
Yep.
Your cash in bank would decrease by 10,000, but your assets would increase by only one. Would that still be
Increased by only, sorry?
one sewing?
One sewing machine. That's a good point. Remember, I have told you when we record transactions, we use what is it? Dollar value. We don't write the quantity. Quantity also you can write. Okay, quantity also you can write, but we always record them in.
Oh, okay, so it doesn't matter because they're still balancing out.
Yeah.
So you spend $10,000 and you get $10,000 per sewing machine.
Yeah.
Okay, so
But you can argue this way. Let's say you purchase a sewing machine for 10,000, but its real value is more than that. Maybe let's say 11,000. But can we record 11,000? No. Why?
Because you
Purchase it for 10,000. Why can't we record 11,000?
because 11,000 is not the amount of money you spent
No, because you don't have a source document.
for a big 11,000.
Yes. For 11,000, you don't have source document, yes?
Yeah.
So how can we can't do imaginary pricing? So then, so 10,000, and then you can say, I mean, still the value is 11,000, sorry, 10,000. But maybe you can say something like this. So let's say you purchase a property you purchase for 1 million. Later it becomes 1.2 million. That 200,000 you can record if you want, right?
Because you have
Let's say by the time you are selling it, then it's a it's a revenue. Why? Because your owner's equity is increasing, your asset also increasing. So it is basically fitting the opposite. Imagine the opposite. We are selling it for a loss. So you purchase for 1 million, you are selling for 900,000. Then you are making a loss. Then what will happen? Your asset is decreasing, right? Asset decreases, also your owner's equity decreases. Yep. So now your doubt is cleared? Yep. All right, so machine. Now at the same time, because it's an asset, I'm going to do another thing. I'm going to go to the balance sheet, right? Balance sheet, I'm going to update that sewing machine somewhere here. Probably we can do it on the non-current asset sewing machine. 4,500.
Does it not fall under tools and equipment?
Probably it's a machine. We'll put separately.
Okay. So you have to recalculate total assets.
Yes. Okay, then that one is done. Next one is
Interest.
interest on loan. What is it? Is it an expense, cash outflow?
Wait, it's a liability
Uh-huh.
and a loan is something that like you pay
No, it's the interest.
the interest on. But what is the interest on a loan?
Interest on loan is basically for a loan you have borrowed.
Yeah.
You are paying interest.
So you pay that regularly.
Yep.
And it's a decrease in your.
Yep.
So it's outflow. So it's
Yep.
not very young.
Yep.
So your loan just increases.
Yep. Yep. So your interest and expense, you are paying it daily, I mean regularly. So subtraction. Right. Then
Decrease your
yeah, is it an expense?
decrease your cash at bank
Yes.
and it wouldn't increase any other asset.
Yes.
But it wouldn't decrease your loan.
No, not the loan, not the principal amount we pay. It's the interest. So
Just the interest on loan. So
yes,
it
is an expense.
You could write up the
Yes. Interest on loan.
those are all the pages.
Excuse me. No. One more. What is it?
Inventory. Oh, GST pay. Yeah. It would be outflow.
Outflow where?
On the interest.
Yes.
Interest.
Yeah. Operating.
Alright. and then you'll pay off your GST. So it's decreased at cash at bank. But there's no like other asset that would increase because so it would be an expense.
Yeah. Sorry, what is an expense? GST paid? No, GST paid is not an expense. Why?
You're like it decreases your cash at bank.
Yes, it decreases your cash at bank.
But it doesn't increase any other assets.
Yes. And also you have to think the other thing that you have to check is if the owner's equity is affected. So GST paid, is this anything to do with the owner? No. It is something that we have collected. We have collected on behalf of the on behalf of the ATO. Yeah. So we collected it for ATO. We can't put that money in our pocket. So then we have to we have paid it. Right. When we paid it, our GST liability decreases. So that means it's not an expense. So however, it is a cash outflow. Basically, that's it.
Could be expenses.
No, none of them GST, because GST always to deal with the liability that we are obligated by the government rules. Okay, now shall we add all the now? No, one more thing. We can do, if you want, we can do cash flow, cash out, cash flow statement. Yeah, we'll finish this. After that, we are not done with the income statement yet. Right. So get the total cash payment. 16.
$19,520.
19,520. Correct. Then we have 17,590 and take away 19,520. So basically you are making, yes, 1930.
Yeah.
Right, 1930, that is negative. So put it in brackets. Then sewing machine, next one, also negative 4,500.
So you just add 1930.
Yes.
Or in the you do
Yes. Right. Then next one is 800 financing, but that's positive. Yep. So then I'm getting net increase or decrease in, I'm going to add all of them, all the green things. So I'm getting 30, 6, 5, 630, which is negative though. Right, so net decrease in cash position. Then the bank balance at the beginning. Where can we find it? Bank balance at the beginning. It's here. Look at the assets in the balance sheet, right? So 5,500, which is positive, right? So that's a positive 5,500. Yes. And then closing bank balance is going to be 130, which is negative. Yep. Right. Then now you can cross check if this 130 was correct. Yes. How? How can we cross check Tenru? Yeah.
I'm not sure.
Yeah. Basically, how you can cross check it is um, you get the total of the, I have told you, we get the total of the cash receipts 20, 1590. Yeah. And then you take the cash receipts, which is the total of 27 to 20. So then you get the difference. Yes. The difference is going to be 5630. Now we can cross check if this is correct. 5630, which is plus minus. Minus, yes. This is a minus. So is that the same amount? Yes, that's the same amount. If this one tallies with this, and that is equal. So that means we have done correctly. Mathematically, we are correct. Arithmetically, we are correct. Okay.
So can't you just, like, if you're given the cash receipts and the cash payments journal, can't you just like get the bank balance straight away? Oh, not the bank balance, sorry. The net increase or decrease straight away.
Sorry, if the
Like, if they give you the cash receipts journal and they
yes,
give you the cash payments journal, can't you just calculate the net increase
yes,
straight away?
yes, that's what we did. Yeah.
But like before you add any items, you can just check it immediately.
Yeah. Yeah, but what we have to check is if we have done our cash flow correct. You know what I mean? We can do that anytime, as long as we have the cash journals. Excuse me. We can, as long as we have the cash journals, we can do that. But the thing is, what we cross check is if our cash flow statement is correct. Does that make sense?
Yep.
Okay, now cash flow statement is done. If you want, we can do one thing. What is it? This bank balance 130, we can go and record in the where can we record this 130 in the balance sheet? Okay, let's go to the balance sheet. It's a negative one. Negative one means what? Bank overdraft becomes a current liability. So write bank overdraft 130. Don't put brackets here. We don't use brackets in the balance sheet low income, so only cash. So that's done. Right. Right. So that's done. Now we are going to do another thing. What is it? We are going to we are not done with the old information. We are going to the sales journal. Sales journal, we have, what is it? There is a correction. Um,
Yeah.
we have done them. Okay, good. Right. So this should be in internal materials and then accounts payable, right? Okay. So sales journal fees. What do we record in the sales journal?
The amount of money you receive based on the sales of the business has done.
Yes. So where do we report it? In the cash flow, income statement, balance sheet? Cash flow is finished. So on which basis are we going to record in the sales journal?
The sales journal.
Sales in which basis?
Well, in your,
Cash or credit?
it would be cash.
Sales journal?
Well, could you repeat the question?
Yeah, sales journal, what transactions do we record?
Sales. Credit.
Correct. Credit, yes, on credit, yes.
Wait, wouldn't you, since it's accounts receivable on your balance sheet, you would record it in asset?
Yes, you record it in the balance sheet as well. But firstly, we record the fees, 4,500. Where? And the
It would be revenue.
revenue, very good. It's a revenue, wonderful. Right? So we go there and we'll say credit fees.
Would you not call it accounts receivable? Or is
No.
that just for the,
Yes, just for the credit fees, 4,500. Okay.
So the sales and the purchases generally don't go into the cash flow statement because they credit.
Yes.
Because it's only
Yes.
cash.
Yes. Only cash flows. Only cash channels go into that. Right. Then fees done. GST, not revenue, nothing. Total accounts receivable, we'll deal with that later. Purchases journal, inventory of materials. We have already done that. We have dealt with. Why? Yeah.
We did cost of material.
Yes, cost of materials, 1900 is considered. So we don't have to take it as an expense again. Right. Then done. Now, technically, we are almost done, except for additional information. Inventory of materials, that also we have done with, but this 3,000 you can record somewhere. Where? We can record in the balance sheet. Yes, so we'll record that. Yes, so please write in the second line of the current asset. I'll tell you why it is. You can say inventory of materials. Uh, 3,000. Okay. Then next one, loan. OCHL is repayable at 4,800 per annum. There is one more thing that I miss. I couldn't do. What is it? Remember there was a loan repayment.
Yeah.
How much? 400.
Yeah.
That 400 go to the balance sheet and put here minus 400. Otherwise, yeah, because we paid. Otherwise, if it doesn't make sense, we'll write from here, this side, minus 400. Right? Okay. Then also it says loan loan OCHL is repayable at 4,800 PA per annum. Why do they say that?
Because it's like, it helps us operate the period.
Yes, and is there any importance of saying that 4,800 PA?
Like, you could say, like, since it's 4,800 per annum,
Mhm.
calculate the monthly installments.
Okay.
Pay this amount to.
Okay. Yeah, so that we already done 400. Anything, any other any other benefit of saying that? Okay, so if it is annually, we are paying 4,800. What does that indicate to you?
Like a fixed amount.
Yes, so what do we do? At 4,800, we are going to, yes, it is a current liability.
Oh,
So then we are going to say 4,800, right?
it's slow.
Yes, you can say loan or CHLS. How much? 4,800.
Since it's due, wouldn't you do 400?
For 400 only?
But like 4,800 would just be like that the payment for the month.
Yes.
But
400 is the payment for month, yes.
why wouldn't you write that instead of 4,800?
Yes, because why? What's the rule for the current liability? Why, what do we report as current? Yeah, what do we mean by current? Yeah, what is current? Sorry?
We could be like moving to the entire loan,
No, what do you mean by current?
like it happens in this period,
Which period?
next 12 months.
Yes, that's the thing. So, yes, it doesn't really matter why, as long as it is satisfying the 12 months period, that is what is we are reporting in the current. Because remember, see, balance sheet, we have done them before. I have given a question for this one. See, balance sheet is given as asset, meaning you can prepare the balance sheet at any time. It's not for 1 year, for 2 years, 1 month. No. We prepare it as at a given point in time. Okay. So loan or CHL 4,800. Right? Otherwise, you can ask me like this. We paid 400 from this 4,800. Why don't we record 4,400? Why can't we report 4,400? No. Why? Always 400 per month. 400 times 12, 4,800. Every time we are paying 400 a month, yes? Meaning 4,800 a year. Always it will be in a time period or time gap of 12 months. Yep. Okay, now next one. Now see, have a look at this. We identified 4,800 from that. So 30,000 take 400 is how much? 29,600. From 29,600, we subtracted 4,800. So what's the remaining? 24,800, yes? Yep, 24,800 is remaining. Okay, so then where do we report that? 24,800 is a?
Wait, I need to write.
Yeah. Okay, take down. Yep, so where do we report that?
In the liability.
In the liabilities. Which liabilities?
Our,
No, current already done.
okay.
Non-current. So because it's we have only one non-current, we can record.
In this period, you pay 400, but 4,800. But in the entire loan is
No, we didn't pay 4,800. We paid only 400.
like, I'm saying for the 12-month period, you
Yep.
pay 4,800.
Yeah, you are paying 4,800. Yeah.
But the entire loan
Is
for 4,800.
yes.
So you pay however many periods till the 2,400.
Sorry, you will pay however.
Like,
How many?
like since one period is 4,800, you would pay the loan off until like that 2,400 is paid off.
Yeah.
And that'll take like 5 or 6 periods. Right?
Yes.
Yeah.
Yes. You mean like about 5 years?
Yeah.
Yep.
So
Okay, next one. Right. Next one is we are done now with the income statement. Now we can calculate the net profit or loss. Right? Shall we do it? Right. So what's the total revenues coming to? 18,400, and then total expenses coming to 14,500, 15,450, right? Again, we don't use brackets or anything. So we get the difference of the, which is a profit, 950 and 2,950 is the profit. So where do we report the profit? Profit we report in the balance sheet again. Why? Balance sheet under the owner's equity. Why? Because only the owner can claim it. I'm going to write here plus net profit 2,950. Got it? Right. Then net profit is done. After that, cost of materials done. Part B is done. Part C is done. Balance sheet we had to do, but before we do balance sheet, we have to do three things. The three things are going to be calculating the GST payable, right? I mean the GST balance, then accounts receivable and payable. Okay, right. Then what we are going to do is I will show firstly accounts receivable. Okay, I'm going to show you accounts receivable. Accounts receivable. This is actually meant to be working. Okay, workings. So how you calculate accounts receivable? I have given you the formula, by the way. You get the accounts receivable at start. How much is it? Accounts receivable at the start. Where can we find it? The balance sheet. How much? 7,000. Okay. Why is it balance sheet? Because we are doing this one. This one has been given as of 31st May, right? We are doing it for 30th June. Then basically 7,000 we can record in the at the start 7,000, right? Then for that you are adding sales. So sales in the sense credit sales. Okay, credit sales plus GST. Where can we find this one? Credit sales plus GST. Sales journal. Very good. 4,950 if I'm not mistaken. Yeah, see 4,950. So then we can take that 4,950. Then from this one we are subtracting receipts from, yes, cash receipts from accounts receivable. Right? Where can we find it?
Find it in. Or you find it in the cash receipts.
Cash receipts journal, very good. Which is, yes, 2300. So you subtract it. Right? So if you add them together, what do you get? The total amount that accounts receivable had to pay us. But when they pay 2300, we subtract it, meaning they don't have to pay this amount now anymore. So we subtract. Then as a result, we are going to get the, yes, which is the amount that they have to pay us, right? 9650. This is the accounts receivable at the end of the period. 9650. Right. Now, this formula, yes, these workings take down because it is required. Right? Okay, 9650. Where do we record 9650? In the first, yes, as the first current asset. Accounts receivable 9650. So you underline that. Sorry, don't underline asset. Okay. 9650. Similarly, do you think you can calculate accounts payable?
Just accounts payable stuff,
Yeah.
which would be
Yeah, I'm going to I'll use the same space, right?
accounts payable stuff is
Accounts payable now, right?
2500.
Now I'm going to say accounts payable at start, which is
2005.
2500. Good, 2500. And then
The total accounts receivable in your purchases journal. Oh, wait,
2500, this one. Then I'm going to change this one, which is credit, not sales, purchases. Yes. Credit purchases plus GST. Where can we find it? Purchases journal. So purchases journal is giving us 2090. So record that 2090. Then not the receipts. This is going to be not receipts. What is it? Payments to accounts payable
And that would just be 3,100.
3100. Very good. Then we subtract all of them. Becomes 90. 1490. Yep. 1490. Where do we report it? 1490 as the current liability. Accounts payable 1490. Okay. All right. Then we had to do a big job more than this. Double the information of this is we have to calculate the GST. Right? Before we do GST, I will give you a note. Okay. Right. So this GST balance calculation Please take down.
In my book.
Yes. And having calculated, having taken it down, you have to try doing it in the question. Right? However, you won't find all the information, but most of the information would be there. Right. So we have GST payable, which is at the beginning of the period, which is 1,000. Yep. We have 1,000, which is here, GST payable. Right. So you can take that one. Firstly, GST payable 1,000. Then you have GST settlement. Do you have GST settlement?
Yeah.
Yes, in also 1,000 at the beginning of the in the cash payments journal. So this 1,000 and that 1,000 technically cancels out. Yes, these two cancels out, right? Then do we have GST received in cash fees? Cash fees, where can we find it? Cash receipts journal, also GST paid in cash in the cash payments journal. We'll take both of them together.
It's 1,390.
Yeah, 1,390 is the receipt, 870 is the payment. Yes,
It's
1,390 is received, 870 is paid. So I'll put that within brackets. Then, do we have GST on credit fees? Fees, yes. Then we have GST on credit purchases. Yes. Where can we find them? Sales and purchases journal, very good. Sales journal, as I remember, 450 is what we collected from sales here. Right. So we have 450 here. Is what we received. Now 190 is paid. Right. Then we'll record those two. 450 and 190. 450, 190 is within brackets. Then when you simplify all of them, we will get technically the GST receivable at the end. So I'll calculate it. 200, 330, 780. GST payable. No. Yeah, 780. Yeah. Right. Then 780, where do we report? In the balance sheet as GST payable. It's negative, yes. 780. No, not negative. It's positive, but we have to, meaning we have to pay. If we go to a negative, that means we are going to receive. Yeah. Yeah. Because all the amounts that I have put within brackets or minus means we have paid. Positive means we have received. So that means if we end up with the positive means we are going to repay that. So it's a liability. Right. Then what are we going to do? Now we can start from the beginning of the balance sheet. Right. Let's start. Right. Bank, is it done?
Bang.
Yes.
Yeah.
Bank is done. We recorded already. Accounts receivable done. Account inventory of materials done. Tools and equipment, no. Van, no. Sewing machines, no. So then we'll record those three, right?
Oh, in the balance sheet.
Balance sheet, yes. So tools and equipment 76.
That's a non-current one.
Yes. $76,000. Van, 27,000. Sewing machines, 4,500. Yes. Right. Then you can online that. Basically, that's all the non-current assets. 500, 17, 107, 500. 107, 500. Okay. Then is that all for the current assets? Yes. So you can add them together as well. 12,650. So let's add the total assets. So current and non-current. I'm getting 150, 10, 2, 120,000, 150. Right? The next one. Now we are not done with the current liabilities, I mean the liabilities section in the balance sheet. Let's start. Accounts payable, is it done? Loan done. GST? Yes. Capital? No. Capital we can 84,000. Capital is 84,000. So I'm writing it here. Capital 84,000. Hold on. There is a small problem. Don't rub it though. I'm going to write here. Capital 84,000. Right. But there is another thing. What is it? There was a capital contribution. Yes. How much? 4,000. Yes. Where can we find it? See? In the
Oh, yeah.
yeah, but we didn't record it anyway. Capital contribution 4,000, which is this 4,000. And then also we had drawings. That also we had to consider 2,800. Okay. Capital, we are writing 4,000 here. We already wrote it. Right? Net profit done. From that, we are going to subtract drawings minus drawings 2,800. So then get everything right. I'm getting 88,150 for the owner's equity section. However, I had to add the bank overdraft, I'm sorry, current liabilities as well. So then I'm getting 0, 0, 11, 11, 22, two remaining, 7,200. Right, so let's add together 50, 11, 12 is 2 remaining, 8 plus 2, 120. 150 balancing. So if it is balancing means total assets equal to total equities means we have done it correctly. So that's it. How do you find it?
It's good.
Good. So now what do you have to do? You have to go home and practice it, okay? Take a different piece of paper, practice the question. All right. Then we have to do one more thing, part E. Okay, part E. I'm going to rub this part because I'm going to write it here. But if you have written something, just leave it over there. I mean, for this section, right? If you have written, okay, I'll leave it as well. So maybe I can draw a line here, right? And then we can do the rest there, part E. Okay? Because it's a small thing. Okay, now have a look. Read the question.
Um, even though, so like,
Yeah. You think you can answer this question?
maybe.
Maybe.
Um,
But
uh,
yes, maybe. But the thing is, I haven't taught you this part yet.
that's right.
Yeah.
So alterations was able to earn profit.
Hmm.
So basically,
Despite of suffering a cash deficit. So was there a cash deficit? Yes. How much? No, that's not the cash deficit. 5630 is the cash deficit, which is the net decrease in cash position. Meaning we have made the loss in cash. We received why? We received only
that's only the.
how much?
Yeah.
We received 21,590, but we paid 27,220. Meaning we have lost cash 5630. But
It doesn't consider the credit.
but we made the
Credit.
profit. Okay? Yeah, why is that?
Since this is only like the 5630.
Yep.
It's only in your cash flow statement,
Mhm.
but it doesn't take into account
Mhm.
the entire income as a whole, which is why in the revenue and expenses,
Yes.
they made more revenue
Yes.
than expenses,
Yep.
and um,
So what would be the reasons?
they had more credit sales
Yes, than the
of cash. Oh, they had
no.
more credit sales.
Okay, so now that's a good point. You are considering you are claiming credit sales. But what is the corresponding item for the credit sales for cash?
Sales.
No, not cash sales. Because why? Cash sales also will become a revenue. Yeah.
The corresponding item.
Item for the credit sales. Do you think that you are going to get back the credit sales in cash? Through which source?
Um, I don't know.
Yes. Accounts receivable.
Accounts.
Receipts from?
Accounts.
How much? How much is the receipts from accounts receivable? Yes, this one. Yep, 2,300. That means still your point is valid. Why? Why? Because how much was our credit sales? 4,500. That means we have made a bigger sale on credit than we received from our accounts receivable. So still your point is correct. Good. What else? So we have to say two, yes?
You say that? Well, I already said stuff about their expenses, right? Um,
No expenses, not all of them.
oh, it's because they earn more revenue than expenses. Or did I already say that?
More revenues than expenses. Yes, more revenues than expenses. That's correct.
So they're not making a loss when it comes to total income.
Yeah, they are not making.
I mean,
Yep, they are not making
a loss.
loss.
Yeah.
Yep. So basically, yeah. Shall I help you then?
Wait, do you give me a hint?
Yeah, basically you have to consider the transactions that has occurred or that has resulted in cash to decrease, but not the they haven't affected the expenses. Also, you can talk about the revenues that has affected the revenues to increase the revenue, but not the cash. So one we already said. What is it? Credit fees.
Cash.
Yeah, cash fees, but it is affecting both. Both. Then you have to think about the other one. The cash payments that haven't been resulted in expenses.
Oh, so that's just like your payments, your
Yes.
outflows.
Yes.
That your payments to accounts payable.
No.
GST settlement.
Yes.
Any GST things. So
Oh, yeah, but also we have to, when you say GST, we have to be careful. Why? Because there are GST receipts as well. Yes.
it's just GST paid and GST settlement.
Yeah, GST settlement is correct.
Why not GST paid?
Why not GST paid? Why? Because we have received GST as well. The opposite corresponding one, opposite one. When you say GST paid, then we can argue that GST has received as well.
So is that all?
Yeah, there, I can tell you one more thing. You want to try or shall I tell you?
Wait, you said like the things that are kept in that are put in the income statement, but
Yep.
not put in the cash flow journal or cash flow statement.
Mhm.
That's the reason, like, that she's able to make a profit because some things are considered and some things are not.
Yes.
So
Yes.
that'd be 2 points.
Yeah, then what is the second point?
Is that is, yeah, I said the first point. And then
Yes.
that's the second point.
What is the second point?
Some things like
No, we have to say like example. We have to say like item, not like general.
oh,
We have to be specific.
so your cost of materials used are included both in the cash flow statement and in the income statement. But things like your GST settlement are
Yeah, GST settlement is correct. Because why? We don't have the opposite thing. Yes, we don't have GST refund.
Oh, yes. Okay.
Yeah, like that.
Yeah. Yeah, is that 2 points?
Yeah, basically you said 2 points. What are the 2 points? The credit fees thing, and also I can tell you easy things than that. What? Look at this sewing machine. Sewing machine. Yeah, what is it? Did it decrease our cash? Yes. Did it decrease our expenses? No. Similarly, loan repayment. Did it decrease our cash? Yes. Did it decrease our expenses? Oh, I mean, increase your expenses? No. Right? So those are the ones. However, I have to explain you the theory first. We'll do the theory first. You think the theory is there? Yes. This is the theory. Please read this part.
So like the question was, uh, referring to the second one,
Mhm.
the reasons for earning a net profit and suffering a net decrease in cash position.
Yep.
Okay.
So done reading?
Yeah.
Okay. So basically, this one is general the cash versus profit, right? Is what you have to understand first. Why is that? Because cash is what? Cash is the cash at bank or notes and coins that we are receiving and we are paying. Profit is different story. What's profit? Profit is the positive difference between revenues and expenses. So do you think the cash and profit, they are the same concept?
Cash.
And profit? No,
So,
they are different. Why? Because of three reasons. One reason, right, is that all cash transactions don't affect profit, yes, revenues and expenses. Then all revenues and expenses don't affect cash. Also, there are some items that are affecting both of them, but by different amounts. Like what? What we discussed. Okay, when we sold items, or when we sold inventory, or when we provide our service on credit, then it's going to increase our profit, but not the cash. Okay, so like that. And then
could you explain?
yeah, that is the example. Is that what is it? The credit fees and cash receipts from accounts receivable. So the item is credit fees, that is, which is affecting the revenues. But what is the corresponding item for that affecting the cash? When the accounts receivable pay us in cash.
Okay.
Right? So then those are the two items. Right. Then what we are going to do, these are the reasons for earning net profit but suffering a net decrease in cash portion, like in our question. Right? What are those? Basically, cash drawings. Right? But in this case, we can't say cash drawings. Why? Because we have a capital contribution as well. Cash drawing was, how much was cash drawing? 2,800. How much was the capital contribution? 4,000. That means we can't say this point. So there was a capital contribution. Loan repayment? Yes, you can say. Yeah, loan repayment we can say. Why? Because, yeah, no, 1,000. Loan repayment, sorry, 400. Yeah, you are correct. Loan repayment was 1,000 and we didn't have a loan received. So that we can say this. Cash purchase of non-current asset, a sewing machine, GST settlement. Yes, we chose 1,000. Then reasons for generating net opposite. We are creating a net loss, but at the same time, we are getting more cash. A loan, capital contribution, a GST refund.
We didn't have, we had a loan, but we didn't.
We didn't have a loan. Loan received. There should have been a loan received.
Oh,
Yeah. We didn't have loan. There was something, but that we had received earlier. Yeah, we only paid. There was a capital contribution. That's the correct answer, but not for this question. I mean, we can't say this answer for this question because we have the opposite. GST refund also we didn't have. Okay, now I'll give you the answer straight down for part E. I can give you actually many, but I'll say at this point, number one, purchasing sewing machines. Number two, GST settlement. Right? If you want, I can say number three as well, but two is enough.
Capital contribution.
No, capital contribution we can't say
Ask is the other one.
because it's opposite, other way around.
Say, drawings now.
Drawings also we can't say. Why? Because there's a capital contribution. Yeah.
We can say so, where is this like? We can't say it.
Yeah. Also, we can say what is it? Loan. Yes. Repayment. Yeah. So that's the answer. No. Just you have to just write.
Oh,
You don't have to explain exactly.
okay.
So that's the answer for part D. Right. Then we have one more thing. Theory part that I have to tell you. This is the thing. Please read it.
What is budgeted?
Budgeted means like anticipated or projected. Yeah. We haven't done it yet. We are doing in unit 2.
Are we almost at unit 2?
Yeah, we are done with unit 2 with this.
We done unit 2.
No, we are done with unit 1.
Oh, okay.
Yep. So, but what are the uses of income statement?
Back to 8.
It helps in decision making. How does it help decision making?
Like
Because
anticipate for the next period.
yes, basically when we have made the profit or loss. So imagine we have made the loss, then we can analyze where business has gone wrong. Maybe our cost of materials was too expensive, our wages were too high, our utility expenses were too high. So like that, we can see why business has made a loss, and we can correct them next time, and then we can compare with the targets, right? So let's say it's like you go to your SAC, assuming that you can get 90%, but if you have got it, good, you can improve it next time. But let's say you couldn't achieve it, meaning you have to see why you couldn't get it. Same thing here. So business is thinking, look, this month we can make a profit of 10,000 or maybe 20,000. Then they can see why they have made it or why they couldn't make it. Then assist in planning for future, right? So we can plan for future. What is plan for future? We get ready, we make plans, we have some proposals, right? Some strategies that we are going to do in the next period. And then finally, we assess the performance of management in operating the business. So usually performance of the management in the sense it measures from the profit. If the business is not making profit, that means the business management is not worth. Right. Then strategies to increase revenue. Usually we can say decrease prices, but sometimes it can be increasing prices as well for for the products that have brand loyalty. And then marketing, improving service, and then strategies to decrease expenses, change supply, and buy in bulks. Right. So what happens when you buy in bulks, we will be able to get cheaper prices. Correct. We can get at discounted prices. Okay, guys. With that, we are done with unit 1. Okay. So well done. Right. Then we are starting unit 2 today. With inventory. So we are starting inventory and the unit 2. Please take down this note. Right. So what's inventory?
Like goods purchased, maybe.
Yes, you can say goods or maybe any tangible product. Sometimes we can say any items or stock that we purchase in a trading firm for the purpose of resale. Right now, the other problem is what's a trading firm? Trading firm is the businesses that they purchase and sell.
Yeah,
Goods.
Goods for
Yeah, so otherwise tangible products.
Yeah.
They purchase and sell.
like clothes.
Yes, correct. Like a supermarket, they purchase and sell tangible products is what we call as trading firms. So remember, in unit 2, 3, and 4, we are going to deal with only trading firms.
2, 3, and 4.
2, 3, and 4, we deal only with trading firms.
Is it different types of trading firms?
No,
The same type.
same. So then what have you been doing in unit 1? Service organization, services, right? Like ours, right? But in the future, only trading firms. Then there is another type of business. What is it? Manufacturing firms.
Yeah.
Manufacturing firms, we don't do in unit 2, 3, 4.
So I go to
Yes, you will do it in unit 5.
unit 5.
Yeah.
There is no
In the that's why you do unit 5. Yes. Yeah. So basically, yes, manufacturing businesses we don't need, right? But in my VC, I did the manufacturing firms. It's kind of fun, but whatever it is, you will do it later if you do accounting. Right. Then importance of inventory. There are some significance of inventory as well. What is that? It's a main source to generate revenue. Why? Because it's a main.
Yeah, it's
main,
like trading firm.
yes, that's basically the main revenue source for a trading business, and also it's asset is the most significant. Sorry, inventory is the most significant asset. Why? Because inventory is the one that is determining the other assets, cash at bank, accounts receivable, then other non-current assets, etc. Right? So inventory is basically determining other assets. Finally, inventory is one of the most susceptible asset, or we call vulnerable. What I call is susceptible or vulnerable, meaning it is exposed to the
Change.
risk
Yeah.
of basically misusing or in abusing. Why? What does that mean? So basically, customers can lift them. Employees can lift them. They can be damaged.
What is lift?
Lift means like they steal.
Oh,
Yes, customers can do it, employees can steal it, and also it can be damaged.
it's just a tangible thing.
Yes, it's a tangible.
It's
Yeah.
it's resolved.
Yeah, not like, yeah, so it's no good.
Not done. Just
Yeah, correct. Usually they can't steal my service, right? So basically the services cannot be stolen, but goods can be stolen. Okay. So then basically those are the that is actually the introduction of the inventory. The rest we'll do next week.
So how is like units 3 and 4 like